Well, cheers and a happy new year to you, Zero DT team. This is your long delayed routine briefing. It's been almost a month. The last briefing was on December 16th. I'm happy to be back. I hope everybody had an excellent holiday season, and I hope that you're all ready to start the new year off on the right foot. So, I have some fun things planned for this channel this year to make it a little more valuable to everyone, more than just these briefings. The main thing that I'm going to announce, and we're going to really get going either next week or the one after, is a $100,000 challenge. I will uh, tell you more about that as the time comes. So we're going to start with $100,000 in the account, and we're going to trade it uh, with Zero DT, and also expanding into kind of the wealth creation side of things as well. So I'll tell you more about that, but just that's the first little announcement for that is next couple weeks we're going to get that going. It's going to be a $100,000 challenge. It's going to be uh, I think pretty helpful and useful to everyone, and we will go from there. So just for today, we're going to do what we always do. We're going to look at price, volume, and volatility, and we're going to see if we can't figure out uh, how to trade this market today. So it's a bit of a complex day. You can see the routine warm-up document here. If you're not familiar, I know it has been a while, so I might even get a new viewer here. Um, Regardless, you can view this through the links in the bio. And real quick, you can also engage with me on those links as well. Right now, the primary, I think, engagement area will be the Twitter. So Review is shutting down, which is my newsletter service. I'm going to have to move to Substack. I've mentioned that in the past. So I think just for now, let's focus on that Twitter engagement. And if you are a subscriber or you want to subscribe, you can still do so through Review. What I'm just going to be able to do is export all those email contacts into my new Substack profile as well. So when we open that new Substack, that's kind of going to be when we launch that $100,000 challenge. So that's those two are gonna coincide, and like I said, it's gonna be in 2 or 3 weeks, I'm thinking. So enough of the promotions. Let's look at what the market is showing us today. So I'm just gonna highlight this comment again. You can see it all if you go to the links in the bio here. You can access this page by doing there. So I'm just gonna go ahead and click that, zoom in a little so we can see this together. And let's look at it. So, like I said, it's a longer one today, so I'm just gonna kind of go from the top, and we're gonna talk it through. So the first thing is, as you can see, we at least started the day off trying to trend. I personally didn't trust it. I didn't mention it in here, I don't think. But if you look at volatility, in fact, I'm gonna put that in um, toward the bottom here. Let's see. VIX itself is also not displaying. Okay. So yeah, just starting from the top, we have that tentative trend. If you're looking at just raw price action, for example, on the daily chart, you look at those candles. We do have that 3-1-2 bearish reversal pattern, which just means that the day before we had that false break higher, and the bears took us lower and actually made a new low that day. Yesterday we consolidated with that inside day and that crazy Fed action, and today we're ostensibly, I should say, breaking out to the downside. Yet I say tentative because there's not a continuation, and you can see our bounce spot today so far, that 38.25 area, which I talk about down here. That is the bottom of that SPY triangle. So let's just actually look at that real quick, what I'm talking about. I have it on ES. SPY, I think, is just kind of the easiest way to view it. So if we just look at it here on ES, you can see since December 16th, we've been stuck in this range. We've been building out this triangle, and again today, we tapped the bottom of it. So we've tested it several times on the upside. We've really tested it to death on the downside here, and we're still waiting for that resolution until we break through that 25 area, as far as I'm concerned, we're still in chop land. And like I said, despite the trend, everything is telling us that we may again continue the chop today. So we have the price action itself. I think it's notable that you're not only seeing that triangle support, you're seeing that RSI intraday is still a little oversold. So perhaps this bounce here is a consolidation until we go lower. Again, it's all to me just about that 38.25 area, that break of the triangle, and that hold below. We've seen that the fake breaks several times from this move, and we really want to see it hold below, and we want to see that continuation. You can see the various levels down here on the document what we'll be looking at there. But I want to point out that the pivots, so our pivots, which have a volume component and kind of tell us whether whether we have a higher probability of contracting or kind of chopping. We have that significant expansion in both ES and VIX, and that significant expansion, that greater than 50% you see on the screen there, that usually implies choppy action, and it decreases the probability of trend. Doesn't mean we can't trend. We've already seen that reversion, so it's possible that the participants kind of move their positions around there. Again, it's all about that 30-25 level for me. Yet I'm not jumping in expecting that trend until we have that break. And good thing, because you can see we had that reversion right at the bottom of the triangle again, that almost to the tick bounced again. Super frustrating. Yeah, it's very rare that I really can't remember another instance that you see so many tests of the same trend line per se, and it keeps bouncing. I have heard in the past that trend lines are like a fine wine, and the older they are, the better. So this thing's getting older, but man, is it getting touched, and I do think we will break if volatility can get its act together. So again, yeah, I added that there because if you look at the volatility itself, let's see, it's currently up 1.6%. So again, nothing crazy with a 40-point down move. And we really want to see, if you're a bear, I think everyone should be a bear at this point, just out of principle and the number of times this area has been tested. But if you want to see a break, you also want to see that volatility fall through. So looking at, I've talked in ES a lot, but really this is called SPX Daily, or that's the name of the newsletter. I think it's much easier just to look at those SPX levels and really just focusing on one today, and that's that 3,800 level. We're currently at about 3,815. The bears are trying to make another move. What is going to happen at that 3,800 level? Can we hold it? Can we drop below it? Or are we going to buy them back up? And on the upside, that 25 to 35 is our major supply zone. We had that, so I said watch for a potential squeeze if we do push through that RTH open. We did wick it, so we popped back through that. I'm not sure I consider that a complete unwind of the open drive. Purists could probably disagree and argue with me there. So that's why I'm not too focused on that open drive today. I'm not really pushing it because I think that the way the pivots are behaving, and really the triangle pattern itself, is all that matters. It's all about price action. It's all about how we behave relative to our levels, and we're going to see what happens. So like I said, feel free to access this document. Feel free to engage with me on Twitter or on the newsletter itself. Please subscribe if you haven't already, as I will provide these levels, and you'll receive these levels down here, and you'll receive those every day. And we'll see what tomorrow brings. So tomorrow we do have some big news. We have some type of jobs numbers in the early morning. So be watching for a potential either confirmation of today's move, or especially if we close within this triangle, perhaps a move in the other direction. So we will see then. And until our next routine briefing, stay classy, everybody.